Welcome to the Chevalier View. This is where we take a step back from short-term market moves and focus on themes shaping portfolios beneath the surface. Rather than reacting to volatility, we look at how leadership is evolving and what that means for disciplined, long-term investment strategy. On the chart we're covering today, we're comparing U.S. equity factor performance relative to the S&P 500 through the first quarter. Each bar represents excess returns. In other words, which factors are outperforming or underperforming the broader market. One of the most important takeaways from this chart is the shift toward defensive leadership as market volatility has persisted. Dividend yield and value stand out clearly, generating the strongest excess returns versus the broader market. These factors meaningfully outperform both on a trailing 3-month basis and through the month of March. This type of factor leadership is typical during periods of uncertainty. When visibility becomes less clear, markets often place a higher premium on cash flow, balance sheet strength, and income. Characteristics that tend to show up in dividend-focused and value-oriented strategies. On the other side of the chart, more cyclical or sentiment-driven factors like momentum and size have lagged. Now, this divergence reinforces the idea that markets are becoming more selective, rewarding fundamental resilience rather than broad risk-taking. This kind of factor rotation rarely happens in isolation. It's one of the primary ways the markets communicate changing risk preferences. Understanding these shifts help avoid chasing performance and instead allows portfolios to adapt deliberately as leadership changes. At Chevalier Wealth, we focus on aligning portfolios with these evolving drivers while maintaining balance and discipline. My partners and I, we utilize model portfolios that allow for precise factor adjustments, whether that means income, value, or defensive characteristics, without abandoning long-term objectives or introducing unnecessary complexity. The Chevalier view on factor performance is straightforward. Markets rotate, leadership changes, and portfolios should be structured to respond and not react. Periods of volatility tend to reward discipline, balance, and intentional positioning for more than short-term speculation. And as always, our focus remains on maintaining discipline through changing market environments. Short-term volatility can create uncertainty, but lasting progress comes from staying committed to a strategy built around your goals, your risk tolerance, and your broader financial picture. At Chevalier Wealth, we believe money is personal and markets are best navigated with a thoughtful, holistic approach. We'll continue to monitor conditions closely, adjust when appropriate, and communicate clearly so you remain confident in the plan, regardless of what the markets bring. Stay disciplined, stay informed, and we'll talk again soon.